What's up, good people? Welcome back to Stock Up with Larry Jones. Go ahead and hit the like, subscribe, notification bell. Make sure you hit all right, good people? Hey, I got some links down below. Please check them all out, especially the one about Webull. Hey, the promotion is still going on. Just $5 opens up you a new trading account. They're going to give you more than that in free stock, up to $2,300. They got fractional shares. You can trade hours before and after the market closes. Once you set up your portfolios wisely and balanced, you really don't worry. You don't lose sleep over over losing all your money, should I say. There's some things that I want to rearrange in my portfolio, and I'm taking time to do that right during this season. And so remember, for those of you that watched my earlier videos from 2 days ago about the stock market, everything I'm saying from here on out, I'm saying look at these stock, put them on your watch list, and for every dollar you spend, put $2 away into a trading account and don't touch it. So if you do some profit taking on one stock, don't take that money and rush it back into the market. Just hold that cash. Let's cash up right now, because when these big dips come, we're going to be ready to purchase, right? Fire sale. We're just going to start buying. Remember, the lower you buy a stock, the less risk you have. And I'm going to continue to go back to March of 2020 when COVID hit. Had you had the amount of cash that you have now, all your stock in cash, just think about where you would be right now. You really wouldn't be worrying that much right now, because you already know that this volatility is up here, but you bought down here, right? For anybody that has kids, for anybody that's looking for retirement, for anybody that want to take a lot of guesswork out of the market, you should have some ETFs, index funds, and some mutual funds, all right? So let's look at a few things. These are the top performing mutual funds over the past five years. I'm really looking at a 10-year period. Let's look at this. This Morgan Stanley multi-cap fund, this is their growth A fund. Over the last 5 years, 40.23%. Most investors are not beating that. If you're doing over 7.5%, you're doing well. If you're doing over 10%, you're knocking the ball out of the park, right? And a lot of us, we've made a lot of money off the bull market, right? So it was easy to make 10, 15, 20, 30, 40, 50%. Like, we were making, we were hitting 300% last year. But let's look at this. The Morgan Stanley growth portfolio A, 36%. Transamerica, 34% over the last 5 years. So that's just you dollar cost averaging in and not worrying about the market. Remember, this is with corrections involved and a crash involved in it. And it still performed like that, right? So let's look at some ETFs, right? I'm going to kind of bounce around because Saturday I'm going to be recording, and I am going to have a licensed professional. Remember, I always say I'm not a financial, I'm not your financial advisor. I will have a financial advisor here when I shoot Saturday shows, and we're going to talk about the differences between mutual funds, ETFs, and index funds. Okay, let's look at this, right? Let's look at ETFs, all right, and we'll discuss all of those Saturday. What's the difference in them, right? Look at this. The past decade can easily be tagged as an emerging era for internet usage, mainly in emerging economics. The e-commerce has been helpful in lifting internet stocks. The global internet users were 23.5% of the total population at the end of the decade 2008, which has risen to 59% at the end of, all right, let's just go right here. Invest QQQ Trust. All right. You guys see the commercials if you watch CNBC. Up 528%. 528% over the last 10 years, over the last decade. All right. Let's look at that. here, I got it here, January 1 of 2011. All right, that's 10 years ago. QQQ, you could have got it for $56. It's $365 now. Look at the amount of growth in an ETF. And you don't have to worry about finding all of these different stocks. Remember, this ETF is a bag of stocks all wrapped into one. And all you got to do is buy the bag, good people. People don't talk about these because they're not sexy. Putting $10,000 into the S&P 500 ETF, right? For 20 years, right? So those of you that are worried about crashes and getting discouraged from even investing into the stock market, I want you to look at this. Read this. Taking a difference of 20-year span that also includes 3 bull markets, but only 1 bear market, the outcome is far different. In this period, from 1987 to 2006, the market suffered a steep crash in October of 87, followed by another severe crash in 2001-2002, right? But it still managed to return an average of 11.3% with dividends reinvested, which is a 8.5% inflation-adjusted return, right? Adjusted for inflation, $10,000 invested in January of 1987 would have grown to $51,000. Likewise, the market roared back following the 2008 financial crisis to be a long bull record, right? I want you guys to remember that. So if you're worrying about crashes, they come back. It bounces back, good people, from $10,000 to $51,000. So for those of you that want to keep all of your money into a savings account, if you would invested that $10,000 into, not invested, but put it into a savings account, you probably would have about $10,000 because inflation is growing at the rate of what these banks pay you for a savings account, all right? So here is this same time period, you still would have had $10,000 instead of $51,000. Excuse me. So investing, especially in funds like this, always pays off, good people. And I want you guys to know this, and I don't want you getting discouraged. And so what happens is you're going to see a lot of red days. I've been vocal about it. And what will happen is it's going to shake out a lot of people out of the stock market and get them discouraged. But what I want you to understand is, and I'm going to say it again, I know I've said it before, draw a pie, right? That pie represents the entire stock market. Only draw 25% of that pie, 75% of that pie, institutions. The other 25% slice is you and I, retail investors. 85% of that 25% slice are millionaires. Follow the money. If you want to be rich, do what rich people do. Rich people invest in the stock market long term. And that's what this is about. Long-term investing. It works every time. So the best thing you could do right now to create generational wealth is to open up an account for yourself. If you don't have it, I suggest anybody over 25 do it in a Roth IRA, and we'll discuss that when we have the licensed professional here. That way, you're saving for retirement, and when you do retire, that money is pre-tax, and you don't have to pay all of those outrageous taxes when you start withdrawing from that fund. But if you just want to open up what I would do, and I'm going to see what his suggestion is, I would look at a mutual fund, which next week we're going to discuss 4 different mutual funds. But I would have some money in a mutual fund, I would have some money in an ETF, and I would have some money in an index fund. And what I would also do is I would have different brokerages. But here's what I would also do. I would track my personal trading against these three funds and see over a, not 1 year, over a 5-year period, which one performs the best. Okay. And if you're outperforming these three funds, you're doing well. But you're safe. There's safety in these funds because, as you could see, they perform well over years. All right, good people. I'm going to leave it right there. I forgot to tell you, thank you guys that have been supporting. This has been Merch Week. There's the link below. You can see the merch right there on the site. This is extremely hot. I wore it just to show you guys how it looks, but I wanted to make sure I ordered the highest of quality and on this. So you will see it is very thick, and I suggest ordering it a size up from whatever size you have. But all the merch from now until Monday, you can get 10% off. All you have to do when it asks for a code, put back to school as the promotional code, and you get 10% off. Okay. And remember, this entire week, I'm giving half to a charity, which I'll be sharing with you later on what that charity is. All right. We've been doing extremely well with the merch this week. Let's keep it going. Have a great weekend. Live, love, laugh, and learn. Love you guys.